Banking shares were listless in trade on Monday, May 22nd, as investors assessed the impact of withdrawal of 2,000 rupee notes. While initial estimates had suggested that the banking sector may see a liquidity boost of nearly 4 trillion rupees, analysts now feel the actual deposit accretion may be far lower.
There is accretion of cash deposit that can happen with banks, and as a result of that, there will be some easing of pressure on the cost front. But this is going to be a marginal improvement because this, we are saying that even if it is, it would be roughly about 2 or 3% of the total CASA. So there might be improvement, but I think it is going to be momentary. I think from a sentimental standpoint, it looks positive, but whether it will sustain or not, it is questionable because it is quite likely that money will flow into fixed deposit as well.
The increase in banks' deposit base could prove to be temporary as precautionary demand would eventually settle for lower denominations. Vivek Kumar, economist Quant Eco Research, said. That apart, analysts at Emkay Global expect some of the new deposits could be withdrawn in cash soon after. These possibilities make the move deposit neutral for banks. At the fundamental level, the cumulative net profit increased 57% year-on-year to 1.04 trillion rupees for public sector banks and 23% to 1.17 trillion rupees for private sector banks in FY23. So what should your stock strategy be?
The performance of the global banks are very, very weak. And when that is happening, whether we can expect an upgrade in the Indian banks, not only Indian banks, the Indian sector is, the chance is very unlikely. And secondly, I think we are going to see some slowdown in the quarter-to-quarter growth in the earnings for the next 1 to 3 quarters. That is mostly because of the increase in the cost. And maybe by end of this year, the growth in the credit is expected to come down. Today, which is around 15%, it is expected to come down to around 10 to 12% by in December. And valuations being just marginally above the long-term average doesn't look very, very attractive.
Though analysts feel the RBI's move could provide a liquidity boost worth 0.9 trillion rupees over the long term, they expect bank stocks to remain sideways in the near term as most positives are priced in. Today on May 23, Q4 earnings and global cues will sway the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.